Fine. So we know the market cap, we know the current price, high, low. Now we come to basically stock P will come little later. Then we have, we touch, some of them will touch everything. Okay. But I'm just going to just cover something. Debt equity ratio. Shrishti, tell me this company
Yes,
has
sir.
high debt or low debt?
So they're
A
very
very
low
low
debt.
debt. Almost, how can you describe this 0.03?
Almost negligible or
It's
zero
a
debt
zero debt
company.
company, but you can always say that it has 3 paisa of debt per 1 rupee of equity. Okay. So
Okay.
this has 3 paisa of debt per 1 rupee of equity. Okay. Now we can just check that. We go to balance sheet and go to, the debt part. Debt is how much? Mahalakshmi, what is the debt level? Or Shrishti, what is the debt level?
1648, sir.
1648 crores. And what is the equity?
Equity is equity capital is
Plus
235 crore. Oh, plus the reserves,
49,000
which
crores.
would
So
be
49,000 plus 235. So this is called the equity. And 1648 is debt. So when we divide 1648 divided by 49,000, some 500, 400 crores, so we'll get 0.03, isn't it? Is that clear? Just do that division. I'll just do that for you. Okay. So what we do is basically, so it is like, 1648 divided by 49,000, I say roughly 400, okay? Because this is, if we add, it will be 300, 400, okay? So this will be 0.03. Have you got it now? Srishti? 0.03. So this has been given
yes,
here,
sir.
0.03, if you look at here. 0.03, debt equity ratio. Now, I'll just take you to, for example, I take you to Reliance, okay? Fine. So Reliance is how much? Debt equity ratio. Okay. Who said that?
0.44.
Okay. So I will like other
So
students to
60.
also, interact while we are doing this course. So what does 0.44 means? Anybody other than Srishti? Ashwin is there? Anyone? Srishti, what is 0.44?
So it's 44
Yeah,
paisa
absolutely.
for
Now you
1
can just
rupee of
cross check it.
equity.
Okay. Just now, what we are going to do here, of course, it is before we just go there. So it is how much? 44 paisa. Now tell me, Reliance is having more debt compared to Hindustan Unilever or other way around? Now, Reliance is a big
Reliance
company.
is more
It is
debt.
one of the biggest company of India, or rather the biggest company of India. It has, a lot of oil refineries, so they require more and more capital. Okay, so they need to borrow money, isn't it? So they will always have more of debt compared to Hindustan Unilever, which is not has any kind of factories or plants. Okay, it doesn't require much of capital compared to a company like Reliance. So Reliance by nature will have a high debt equity ratio. Okay. So now we go to the balance sheet. Now look at the debt here. How much debt the company is having? This borrowings. Okay. How much debt the company is having?
3 lakh
Yeah,
seventy-four
absolutely.
thousand
So it has
three
three
one three
lakh
crore.
74,000. Now compared to last year or compared to 2023, has it gone up or gone down? So it was 4.5 lakhs. Now
Gone
it's come
down.
to 3 lakh 74. Of course, in March 24, it was little less, but then it has picked up a little bit. But In the last 10 years, if you see, from 2014, it was how much? 1,38,000. So it has been going up. As the company is becoming bigger and bigger, it requires more money. Okay. But all the companies, they would like to, keep the debt not very big. Okay. Fine. So they keep repaying it as in when they find a chance to do that. So it is 3,74,000. And what is the equity? 8,29,000 plus this. Now just calculate, Shishti, how much it comes to. What you will do? How to calculate the debt equity ratio?
So we're gonna add equity, capital, and reserves, and take borrowings as the numerator and divide that by the
Absolutely,
sum of
absolutely right.
equity, capital,
Now
and
tell me
reserves.
this reserves of 8,29,000. The equity is just 13,000. So this 13,000 was given by the shareholders to the company in form of cash. Okay. Now the reserves have been created by the company. 8,29,000. Now tell me how the reserves have been created. Anyone? Shrishti, first go. You go.
So it's usually the share premium that the company gets that they put into reserves, or the profits that the company
The
has made,
profit
they
when the
keep it as
company
reserves
earns,
also.
now all the profit or some of the profit. So
It's
that means where the
discretionary
other
up to the
profit goes. I mean,
company.
of course, some profit is gone, some profit remains the company. So the some profit which remains, where it goes.
It's equal
So that means the company, yeah,
Dividend.
absolutely. The
the
company is
reserves
declaring
what
dividend.
you
So whatever the company is not declaring dividend, it will sit in the reserves. Okay, so that company is going to use for becoming bigger and bigger. So similarly, the second would be a share premium. Okay, fine. A share premium whenever the company is issuing shares after, through FPOs or rights issues. So they are asking, more shareholders to join. So they collect some kind of a premium from them. Okay, because they can't offer the shares at a par. So because the company is already big, it has a lot of value. So they can't bring people at the face value. So they have to charge some premium. So the premium which is they are charging it going to the reserves. So 8,29,000 crores is the plot back profit, the share premium, and some other reserves. Okay, we're going to talk about those other reserves later on. So this is 8,29,000. Okay, let's go to the chart again. Sorry, let's go to this thing. So debt equity ratio. Now we talk about another ratio, which is called interest coverage ratio. Can you see that? So what is the interest coverage ratio
Yes,
here?
sir.
How much it is? So what does it mean? Do you have any idea,
5.37.
Srishti?
Yes, sir. It's how many times that can the company
Yeah.
use their profit
So
to pay
suppose
back
we
the
go
interest
to,
that they owe.
a balance sheet here. Okay. So, or rather a profit loss here. So this is basically the interest coverage ratio. Okay. So interest coverage ratio is this, which is basically the profit and interest. Okay. So we go to the a profit loss account. So now if I go to the profit loss account, okay. Now before we go to the profit loss account, this is the profit loss account of the company. Okay, fine. Which is the sales, then expenses, operating profit, and then at the bottom there's a net profit which is coming. So company is making 94,000 crores of profit, and the total turnover is called 9,76,000 crores. And the figure at the top is called TTM. What does the TTM means here? Trailing 12 months number. Who is
Trailing
saying
12
that?
months.
Huh?
Shivam.
Okay. Fine.
Shivam.
So, TTM. So, Shrishti or anyone, do you know what is TTM?
it tells the adjusted financial
No, it
performance
is
of
like
that
this. Okay,
company
just
over the
listen to me.
past 1
Trailing
year.
12 months. This is the March 2025, isn't it? These are all 1 year numbers. Okay. And now we are sitting in the month of which month? August. Okay. So April, May, June, July, August. So April, May, June. So 3 months, 1 quarter has gone by. And the second quarter is running. Okay. So if we go to the quarters here, how much is the figure? 9,76,000 is the turnover, as the sales of the company, the top line. So if we go to the quarters and just strictly on a calculator, add up these four numbers, 4 quarters: September quarter, December quarter, March quarter, and June quarter. So that means the company has already announced the result of June. Okay, so it is coming here. So and the March up to March 25, these are all the 4 quarters when we sum up. we get the March number. Okay. So if you want to see, we want to calculate the TTM number, we have to add September, December, March, and June. Add up on a calculator. 2,31,000 plus 2,39,000 plus 2,61,000 plus 2,43,000. Just add up.
So
9 lakhs.
9,76,541.
And what is the TTM number here? Is it matching with your answer?
76,541.
Okay, so that is
Yes,
a
sir,
TTM.
it's matching.
Okay, which means the last 4 quarters. Fine, this is called the trailing 12 months this thing number. That means in last 12 months, how the company is performing. Okay, now tell me, the sales have been growing, is it? From 4 to this, like, okay, 9,62,000 was the last year. And this time it is growing to 9,76,000. So 3 quarters of March 25 and 1 quarter of the new financial year. Okay, so is the company growing in the last 12 months? Yes, the answer is that it has gone up to 9,76,000 because the recent quarter, when we add up the last 3 quarters, then the number is growing up compared to the last financial year. So company is doing well. Similarly, look at the bottom line here. Okay, the profit before tax, it was 1,06,000. Now it is 1,90,000. So is the company becoming more and more profitable as the months are going, or is it becoming less profitable? Srishti? More profitable. So this gives you a trend. So all the analysts or all the investment bankers, they look at this number. They look at the last 12 months, how the company is performing. Okay. Instead of, just focusing on because this is the last, number which the company reported in the balance sheet, in the annual report. So this has become now old. So now, the first quarter result has been announced here. Okay. Here, the first quarter number was announced by Reliance just a few days back. And of course, it shows there is a dip in sales compared to the last quarter. But compared to September, compared to July, June, on a quarter to quarter basis, the company has done well because the corresponding quarter they had done 231 and now they are doing 243. That's why the TDM number is going up. Okay. Because the numbers sometimes are seasonal. Okay. Fine. So generally the June quarter is not so good. Okay. So it always, because this, if you see the June quarter 2023, now in this quarter, June 24, it has gone up. Similarly, in June 2025, it has gone up. On a quarter to quarter basis, it is going up. But compared to the last quarter, the Reliance has shown a decline in sales. Is that okay? But what happens to the profit this quarter? The profit has gone up from how much to how much? What is the profit in the March quarter? And what was the profit of the company in June quarter, profit before tax?
So in March it was 29,103 and in June
Has
it's
it gone up?
37,146 crores.
How much? Substantially, isn't it?
It's gone up.
But what is the major line?
Yes,
If
sir.
you look at the other income, it is not the regular income, but it is the other income which has jumped from, say, close to from 4,900 to 15,000. Okay, fine. So if you look at the other income, whereas the operating profit of the company has gone down, isn't it? The operating profit of Reliance has shown a decline from 43,000 to 42,900, a slight dip about 800 crores, isn't it? Or 1,000 crores. But the net profit has gone up. Why? Because company has shown some extra income. How much? 8,924 crores. Exceptional income. Exceptional item. 8,900. Okay. Can you see that? Now, what is this exceptional income?
Yes,
of course,
sir.
if you just go through and you'll check that Reliance has sold a lot of shares of Asian Paints. It was having a lot of investment in Asian Paint, which is the India's largest paint company, and earned a lot of money by selling those shares. So this is a one-time income which has boosted up the company's profit this quarter. Though the sales has come down and the net profit operating profit of the company has gone down, but when we look carefully, the profit has also gone up. But this is led by what? An exceptional, kind of an event by selling shares of the company. You are holding some shares of Asian Paints and it has gone up. Now, if you look at the chart of the company chart was growing, but then after the result, it went down because the company had not given a very good result. The result was boosted up by a one-time profit and not by a profit which the company is going to earn for long. Okay, so immediately after the results were announced, the street had not taken a very good this thing because the company had made a profit, higher profit compared to what they were doing earlier, but this was largely because of a one-time event. Is that clear? So, so
Yes, sir.
whenever we look at the profit, we should be just focusing on the operating profit of the company and say whether the company is doing good or bad. Here, the company is, doing good over the year. This thing because over the year or the 12 months, the profit is going up. But when we look at the quarterly numbers, then the company may not have done compared to the last quarter. But of course, compared to the June quarter, it is still better. Okay, because it is quarter to quarter comparison, which is more important than the year-to-year comparison. Okay, fine. So is that clear? Now we come to coming back